Good morning. A slightly better than expected US GDP data and some inspiring talks by Federal Reserve Chairman Ben Bernanke lifted the sagging spirits on Wall Street and elsewhere. Not surprisingly, the Asian markets are all up smartly. News that Bank of Japan is holding an emergency meeting to check the unbridled gains in the yen has also buoyed sentiments. Given the positive backdrop, we are up for a gap-up opening. Some shorts may be covered as well. The big question is whether one should buy into this kind of a situation or sell. We would urge some caution as the global situation, especially in the US, looks precarious. At best, what we see is a relief rally and things may soon turn choppy and range-bound. A lot of uncertainty still prevails in the global markets. Do not get too inspired and just jump on to take big directional calls. Keep reviewing your strategy every day as volatility is still here to stay. For the Indian markets, the key events in the near term include Q1 GDP data, auto sales, IIP, inflation and the RBI meeting later this month. Throughout the week, we will get a slew of economic reports from across the globe which will have a bearing on the sentiments. Key among these data points are the manufacturing PMI reports, especially for China, US and the European Union, and the data on US unemployment. Although the main indices are likely to rally today, the large caps are generally not finding many takers due to rich valuations. On the other hand, the broader market has done better. So the interest in small cap and mid cap stocks will remain intact. Technically, the Nifty is likely to face resistance between 5,500 and 5,550. On the way down, the crucial support level to watch out for is at around 5,350. The FIIs were net sellers at Rs 1.08 billion in the cash segment on Friday provisionally, according to the NSE website. The local funds were net buyers of Rs 2.39 billion. In the F&O segment, the foreign funds are net buyers of Rs 24.84 billion. The FIIs were net sellers of Rs 1.56 billion in the cash segment on Thursday, according to the SEBI data. Mutual funds were net sellers at Rs 232 million on the same day. The other news for the day is the Indian economy is likely to clock a growth rate in the range of 8.9% to 9.4% in Q1 of financial year 2011, almost the pace recorded 3 years back. Key infrastructure industries, which are the core sector, registered a sluggish growth of 3.9% in July. Finance Ministry rejects demand for hike in iron ore export duty. Government to allow exports on surplus cotton only. Tea imports to India fell by 10.9% to 9.2 million kg in the first 6 months of the current year. Pulses prices to fall below Rs 60 per kg on higher output. Oil companies set to hike petrol prices up to 70 paise per litre. Shale gas exploration acreages to be available for next years. Tata Motors has entered into an understanding with IndusInd Bank for financing its range of passenger vehicles. Borosil has sold its 18-acre industrial plot in Mumbai for Rs 8.3 billion. Power Grid is among the 3 firms shortlisted by Nigeria to manage electricity grid to be constructed at a cost of $3.5 billion. ABG Shipyard sold a 4.7% stake in Great Offshore for Rs 645 million through open market transactions. HPCL plans to sell 23% of its stake in HPCL Mittal Energy through an initial public offer. Moving on to the recommendations, the technical calls are a buy on Indraprasth Gas. We recommend traders to buy the stock above levels of Rs 330 for a target price of Rs 350 and the stop loss is to be placed at Rs 322. And a buy on Reliance Industries. We advise buying the stock above levels of Rs 950 with a stop loss to be maintained at Rs 930 for a target price of Rs 1000. The derivative strategies are long GSPL September future in the range of Rs 114 to Rs 115 for a target price of Rs 121 and a stop loss is to be placed at Rs 112. And long Syntex September future in the range of Rs 355 to Rs 356 for a target price of Rs 365 and the stop loss is to be placed at Rs 352. Thank you and have a great day ahead.